Welcome, everyone, and thank you for joining us today for Small But Mighty, the unique advantages of small market credit unions. I'm Lou Thompson, Vice President of Client Success at Support EXP, and I'm excited to kick off this session. In the next 45 minutes or so, we'll explore the challenges and unique advantages smaller credit unions have in this competitive banking marketplace. We'll also learn how to gain the clarity you need to accelerate into your future. Now, I'd like to introduce our session leader, Rhonda Sheets, who is the founder, president, and CEO of Support EXP. I know her insights will be invaluable. Without further ado, let's get started. Rhonda, take it away.
Thank you, Lou. I'm glad to be with you here today. So just to let you know about Support EXP, if you're not already familiar with us, we help credit unions of all sizes simplify the complexities of the member experience, and we work with our clients to create a culture of world-class performance that actually leads to tangible loyalty that can be both measured, sustained, and continuously improved. So as Lou said, today we're going to focus on the unique challenges and advantages of smaller credit unions. So let's get started. Now, there have been some key changes over the years in what NCUA defines as a small credit union, of course, intended to reduce regulatory burdens, and you'll see that here. And currently, 100 million and under are considered small credit unions. And while we have credit unions of all sizes on the session today, some of the tensions that we'll go through initially are experienced by all sizes of credit unions. It's just the larger the credit union is, the more complex the problem becomes, the more difficult it is to tackle, because those tensions are spread out over a much wider field. So now, whether you fit into the NCUA small category or not, there are certain advantages that a small credit union has that larger credit unions strive very hard to emulate. Simply as said, the machine of the larger credit union has to put forth significant effort across their landscape of functional areas and processes and platforms and products and people and channels and their market to accomplish what the smaller credit union can do with just the right insight, just the right tools, and the agility that comes from being small. So with that in mind, let's look at our session objectives. And so in today's session, we're going to go after a three-step plan for leveraging your unique advantages. So first, we'll identify the challenges. What are the biggest tensions you're dealing with? And I think you'll probably relate to at least a few of these challenges. And there are plenty in the current operating and marketplace environment. And then from there, it's marshaling your advantages. So how do you leverage them? So this is a bit of the how of the session. How do you leverage them to draw your members closer to you so you can have predictable growth, sustainable growth? And then finally, live your difference. We'll look at some key imperatives and a little more of the how with a bit of an example from a current client for strengthening member loyalty. What do your members want, and what do they need to stay loyal to you? And what does it look like to, with precision, surgically go after that? Now, this last objective leads into a question I have for you. So I want you to reflect on how you are learning about what your members think and feel about you, how they experience you today. In other words, what metrics are you currently using to assess if you're actually living your difference? How do you know if your members are satisfied in doing their banking business with you? Is it NPS or Net Promoter Score? Now, this is a widely adopted metric for assessing whether or not a credit union is living their difference. It's a good indicator, but it's also a lagging indicator. There's also customer satisfaction or member satisfaction metric. More are adopting this metric in concert with NPS so that they know very specifically those things that they need to work on. Or is it ease of use, also known as customer effort score? And so this is actually a leading indicator of where friction often lies in the member experience, a very, very necessary metric. Now, all three of these we would kind of say are the trifecta, but these are the metrics that are all essential for living your difference. And in segment 3, we'll see how some of these come together. So let's begin by identifying your challenges. Just what are the biggest tensions in today's financial landscape? What are the forces? What are the trends impacting both your day-to-day operation and your plans for long-term sustainability? Well, the first tension is mergers. NCUA approves 46 mergers during the second quarter of 2024. Now that's up from 26 that received the green light to consolidate during the first quarter of 2024. Of these 46 mergers in second quarter, 4 received the green light to merge because of poor financial performance, 4 for inability to obtain officials, 2 for poor management, 2 for lack of growth, 2 for lack of sponsor. All of these, of course, coming from the Fed's agency quarter 2 merger activity and insurance report. Now, the remaining 32 got the okay to consolidate for, quote, expanded services. Now, what's your gut reaction when you read that? What's your reflexive reaction? Is it a resigned sense of our time is coming as we inevitably get swept up in the trend? Or is it a firm determination that this will never be us? In fact, one credit union I have spoken with said, at any point that we have to merge, we will instead close down. We are no longer serving our existing purpose. Or is it somewhere in between? Now, there's no doubt that challenges for small credit unions are formidable, but let's look at the historical trend and the prediction around credit unions and the future. So industry consolidation is real. It's leaving fewer and fewer options for financial consumers. It is a significant trend shaping the credit union landscape. The nation's small credit unions are simply going away. About 3% of credit unions disappear every year, mostly as a result of a merger. It is predicted that the current level of about 5,200 credit unions with an average asset size of 335 million will drop to 3,900 credit unions by 2030, with an asset range of, on average, 1.1 billion. Now, with consolidation, generally speaking, we often experience as consumers less innovation, less differentiation, and less quality in the customer experience when there are fewer options and there is less competition. In short, reduced competition can make things harder for customers who end up with less power to influence the market and the buying decision. Now, I could also make the argument as to why small credit unions should join forces to improve innovation and quality and choices for consumers, but that's another session. This session is about the advantages of the small credit union. In fact, for credit unions, the pace of mergers is expected to accelerate in 24 and in 25, due primarily to high interest rates, reducing credit union deposits, high interest rates, reducing equity levels, and compressing net interest margins. So 231 is the projected number for 24, and we haven't even seen that since 2015. So in this tense economic environment, small credit unions must face a host of challenges with limited resources. So here are the pressures that credit unions are dealing with on a daily basis, small credit unions particularly, that leads to real decisions for the present and for the future. And I have no doubt that you are able to identify with it at least one of these challenges and probably more. In fact, these, again, challenges are not unique to small credit unions, but the challenges can be magnified in smaller credit unions with fewer resources that you have. And you see here, it's determining succession, attracting the next generation. Over the past 2 decades, the median age of a credit union member has risen from 42 to 52. Regulatory compliance, embracing new technologies, sustaining talent, creating awareness. A recent study found that 30% of Gen Zers and 21% of millennials are unaware that credit union membership is even an option for them. And so if the small credit union isn't even on the radar of these financial consumers, they're cut off from a very large pool of opportunity. And then lastly, peer pressure to merge. And that is often the elephant in the room. For some credit unions, a merger is a good and right option, particularly when these challenges cannot be met with the clear path forward that creates solid loyalty and predictable growth. But what if that's not your path? And I'm assuming that's why you're on this session today. What can you do now and in the future to create a clear path forward that leverages your unique advantages as a smaller credit union? Well, let's go there. It's time to take stock of the resources at your disposal and to learn how to leverage them, and maybe in new ways that you haven't considered or thought of up to this point. So my aim is to show you that you are stronger than you know. We're going to take a look at the advantages or assets smaller credit unions have at their disposal for dealing with some of the challenges that we just identified. Here are some of those traits that make you, as a smaller credit union, a viable financial resource option. One is community focus. Smaller credit unions are involved deeply within their community with visibility. You provide a niche market expertise. You know your market, you know your members, you know the business. Third, flexibility and agility. You're not the lumbering giant. So when you decide to tackle something, you have the flexibility as a small credit union and the agility to do it. Delivering the most, underscore, bold, italics, the most personalized service. This is something very difficult for the larger credit union to do. And knowing the names, stories, and voices of your members. Innovation and the flexibility and agility for experimentation, new things. And then lastly, connection to the movement and its mission. That's felt very deeply with small credit unions. But at the top of all of this, with the most impact, is service. It's the capstone of every advantage. It's actually what wins the day. And it has to be lived out through every product, every process, all of your people, and every channel. But because you're small, that is something in terms of a capstone service, personalized service that is achievable. Let's look at why this wins the day. Now, I've included a McKinsey study, very recent. It's showing that 71% of consumers expect companies to deliver personalized interactions. I want you to think about that. 71% expect companies to deliver personalized interactions. So your first question should be, well, what does that actually look like? What does a personalized interaction look like? Then following that, 76% get frustrated when they don't find it, causing this friction in the member experience. And that friction is a major driver of consumers leaving a company. That's banking consumers as well as any consumer. If it's difficult to do business with you, they are not staying. So personalized interactions, and in that personalized interactions, reducing that friction in the member experience. Now, as we all know, if consumers don't like the experience they receive, it's easier for them to choose another option, and there are many options waiting. But small credit unions are well positioned to generally know the member and to be able to deliver personalized attention that is tailored to meet that individual and their unique needs. So that's a fantastic strength that a small credit union has. Let's take a look at what it looks like to deliver personalized attention. Now, you see here 5 items that are here. The 5th one is differentiation. So one of the things that you must do, any organization must do, is they have to be set apart from the competition. They have to differentiate themselves. So you could be thinking in your strategic planning, what do we do to differentiate ourselves? Well, the key in differentiating yourselves is delivering world-class performance. Time after time, every study will tell you banking consumers are looking for top shelf personalized service. And so here's what this looks like. And for a moment, I want you to imagine what this would look like in a financial institution that you have as your primary financial institution. And then conversely, at the same time, think about, is that what our members experience when they come to us? So first of all, it's building trust. In other words, you're having confidence in the financial institution that you consider your primary financial institution. Likewise, your members have to have confidence in you. That trust has to be there. And that trust is built in an ongoing way with every member, every experience, every time. Further, what about emotional connection? What does it look like in your primary financial institution relationship to actually feel emotionally connected? And likewise, your members, do they feel emotionally connected to you? If they do, they would have a sense that you genuinely care about them as individuals, not just as a transaction to perform. And then thirdly, in your PFI, do they understand your specific needs? Do they actually know you? And then likewise, or conversely, can your members say when they do business with you that you know them and you understand their specific needs? And then when you present opportunities to deepen the relationship with them, you do that because you know them and you're making recommendations. Your frontline is making recommendations of products and services that make sense to that member because they know you or you know them. And then fourthly, when you walk away from your primary financial institution, are you satisfied with the interaction? Are you satisfied with the experience? When you are, you'll welcome the next one. Conversely, when your members come to you, are they walking away with a high degree of satisfaction in the interaction, in the experience? When these areas are consistently and measurably delivered on, this is where you're differentiating yourself. And this is where your members are less likely to switch to a competitor, even if that competitor is offering lower prices or similar products. And all of this rolls up into loyalty. This is where you keep your members, where your members grow with you, and where you differentiate yourself as a small credit union. It works the same way, whether you are the customer or to your members. Delivering world-class performance is what distinctly sets you apart. Now, let's zoom out for just a bit. Here's an illustration of the entire member experience landscape. Now, all of these touch points are where your members experience you. They experience you through your people, through your products, through your processes, and through your channels. Any one of these touch points becomes a tiny moment of truth where you have an opportunity to either build or erode that relationship. If in those experiences you are building trust and emotional connection, if you're meeting specific needs and increasing satisfaction, you're actually differentiating. And the result of that is you will increase retention, deepen member relationships, improve adoption of your products and services, and all of that leads to improved revenue growth and profitability. So you need to think in these terms. Are we building or are we eroding? And every experience or touch point counts. So, small credit union, your potential is great. At its core, it's really just circling back to that mission, that driving mission of people helping people. So your next question at this point might be just how do we do that? Can you give me the how or a toolkit or a method to accelerate and get on track? I'm going to help you with that in this next segment called Living Your Difference. So we've looked at where your potential lies, and now it's time to embrace what we call living your difference. Credit unions themselves were created to be different, as we know, to offer that alternative to traditional banks. And although it's kind of odd to think that the credit union philosophy of people helping people is considered an out of the mainstream principle, it's heartening to see that it resonates today with so many consumers. It's in that difference that your greatest strength lies. The member experience is the greatest differentiator. So you will want to make sure that you're providing the best experiences that actually live up to today's consumers' expectations, every member, every time. Recognizing that of the tensions we presented, not everything is within your control or easily remedied, nor do each of those tensions have the same degree of impact. But of the tensions we spoke of, one thing is within your control and will have the greatest degree of impact. It's what happens in the human moments that either draws members close to you or drives them away. It's the main question in living your difference. Are you building or are you eroding? That's the question every executive, every manager, every director needs to ask. Are we building or are we eroding? And if you don't know, that is your first step. You have to find that out. You simply have to find that out. What are your members thinking about you right now and in real time? What are they feeling about you? And finally, what are they saying about you? What are the stories they're telling out there that's either building your brand or eroding it? Now, even with limited resources, you can get the knowledge you need to ensure that you're delivering personalized service through your people. After all, that is where small credit unions have always excelled. So let's look at how you do that in a data-driven way that brings about predictable success even for the small credit union. So I'm coming back to this slide to introduce an example of how one very successful credit union uses its data to achieve and sustain personalized service that builds instead of erodes. Now, this is a larger credit union client, but in-depth member intel isn't just for the big guys. Now, in this example, on the following slides, you're going to see how we take member feedback that we collect, then how we drill it down into very specific areas that provides the credit union with the exact actions they need to undertake that will result in the greatest impact towards this increased retention, deepening of relationships, improving adoption, all leading to a greater state of revenue growth and profitability. Smaller credit unions may not have like the large call centers or extensive branch networks or deep pockets for digital platforms, but the approach is the same and the outcome is the same, driving predictable revenue growth and profitability through loyal members who stay with you, buy more from you, and tell others about you in a positive way. All right, so let's take a look at what I have for you today. First of all, let me just tell you, there's a lot that goes on behind the scenes that we do to collect this data and to provide the analysis. that leads to the outcome that then is easy to understand, and you begin to work with these analytics in such a way that drives those outcomes. So distilled down, this data shows how this client's members are experiencing the credit union across all of its touch points. In this case, the scores show that the credit union's people are the driving motivation of what is most important to their members. In other words, what is motivating their members in doing business with them and being willing to refer them is how their service products, prices, access, all how this is delivered through their people. So you can see here at the highest level, almost 47% of survey responses identify people as that driver behind their willingness to refer, or net promoter score. Since people and channels, you'll see that on the right, are the biggest drivers or motivation of its member satisfaction, putting its efforts and resources into those specific areas will have the biggest payoff. So that is the highest level. What you're seeing here is the highest level of analytics, but the key is to get to the highly actionable data so you can move the needle with precision, nearly surgically. So let's drill that down. You first need to know, what are our members saying that influences them the most as it relates to their relationship with us? Until you know that, you may aim in a completely wrong direction with limited small credit union resources. That could be very problematic. You cannot afford to aim in the wrong direction. You must be precise when you act, and you have to act on credible data coming directly from your members. Now, in this case, the credit union must continue to focus their attention on these top 3 areas that you see on the left, some of which are performing and some which need strengthened. Digital banking at 76.54, that's an NPS score. Digital banking at 76.54 is a strong score, yet it's still below their target. Well, what exactly do they need to do? Isn't that the question of the hour? They need to enhance digital banking features in order to hit target, and they need to do that specifically for members under the age of 55 to win more of their business. Let's take a look at exactly the next level of data. Here then, drilling it down, are the exact features for those survey respondents under age 55, and this is based on the order of impact that they need to tackle to improve adoption of their digital services. They need clearly, heard directly from the member, gathered from the member. They need to be able to check their credit score. That's the primary with the greatest impact that will improve adoption. They need external transfers to outside banking. They need to be able to pay friends, and then followed by integration of Visa rewards. Now, the credit union knows from the vast amount of data that has been captured, distilled down to the priorities, and then further drilled down to the exact things that the executives need to decision, prioritize, and work on. This is how you get with precision, very surgically, to know how to move the needle, how to improve loyalty. Well, let's now go back to that main slide, and we're going to look at the member contact center. Now, you can see in the member contact center, again, these are the 3 areas of greatest importance. It's well below their target by 14 basis points. The question is, what do we need to do? It's low, but we cannot aim in the wrong direction. We need to aim in the right direction that fixes this. So what do we need to do? So let's drill it down. So you see here just 5 experience-focused questions as a part of the surveying of members using the call center channel. And here's the precise thing they need to go to work on to improve the experience through the call center or through phone interactions. They need to resolve the request on the first attempt. So this credit union could have looked at many different things and invested many different areas of resource to try to figure out how to improve the NPS, but with the right tools, the right analysis. Now, clearly, they know exactly what they need to work on to improve member loyalty as it relates to this particular channel, the call center. All right, so now, as a small credit union, the question before you, day in and day out, despite the many challenges, is this: are you building or are you eroding relationships? Just as you're on this call today, and you think about the many human relationships, the many human encounters that are occurring across your channels, in each of those interactions, are you building or are you eroding? And at the end of the day, especially as a small credit union, if your members are not staying with you, if they're not adopting more of your products and services, and if they're not telling great stories about you to others, no other initiative will matter. Having your members' loyalty through personalized service and building on that story is the mighty in the small. That is what differentiates you. It always has, and it always will. So as we close, let me share with you a little bit about who we are and what we do. For over 25 years, Support EXP has been a trusted advisor to financial institutions that want to achieve a differentiating customer experience by optimizing their CX performance. We co-create with a niche market of member-focused credit unions, and we have innovated as a result of that the proven integrated solution for total CX management. Our clients are those who are serious about differentiating and competing through the customer experience with world-class as their aim. And though our largest credit union partner is nearly $20 billion in assets, Suncoast in Florida, most all of our solutions are very scalable. In fact, our smallest credit union partner is Regional Credit Union in Chicagoland. And I say that with a smile because we have been working with them for over 20 years. They have climbed from the micro credit union to 180 million in assets. So we are grateful to have a retention rate with our clients of 97%, with an average credit union partnership continuing for more than 10 years. And that is the loyalty that drives us to create, to innovate, and to deliver these types of solutions to our partners so that they too can enjoy member loyalty that is unsurpassed. And so with that, I'll turn this back over to Lou.
Well, thank you, Rhonda. We appreciate all of these insights that you've shared today. So how does Support EXP guide our clients toward true differentiation? It all begins with a diagnosis. This is the foundation of our process. We start by asking these critical questions. What is the current state of your credit union? What is the desired state for your credit union? And what are the obstacles standing between you and that desired state? And most importantly, what are the outcomes you're aiming to achieve? With these answers, we can start to craft a solution that's not only effective, but also scalable, whether you have a small budget or a large budget. So let's collaborate and design a solution that propels you to your desired state. As we conclude today's webinar, let's keep this conversation going. I'm here to help, and I'm the guy who can start you on your path to that desired state. Thank you all for joining, and I look forward to continuing the conversation. Thank you.